Last class we had seen illustration 18 இல்லையா 19 பண்ணோம். Go to question number 19. Go to question number 19. Yeah. Please go through this question. That's all. This is the only area. I request you to go through, then we'll solve it. Settle down, settle down. DA Limited, TA Limited were amalgamated to form a new company called as which one? Data Limited on 31st March 2021. Who will issue requisite number of equity shares of ₹10 each to take over the business of what? DA and TA கொடுத்திருக்கா. Abstracts of balance sheet is given to us. First, what we need to work out? What we need to work out? We have to work out which one? Consideration. We have to work out which one? Consideration. Try பண்ணுங்க பா. Try to work out consideration. Work out the consideration, then we'll decide who is the acquirer. Work out the consideration. 9,000 and what? 11,000 வரும். Let me also work out. There are two methods of working. Since no revised value is given, book value is given, so we can take the first route, assets minus liabilities route. Assets less which one? Liabilities route எடுத்துக்கலாம். What are the assets given? Plant, property and equipment 8,000 and the other one? Sorry. 7,500 and what? 8,000 total என்ன இருக்கும்? 15,500 இருக்கும் total they have given. Then what is the next one given? Financial assets. Financial assets எவ்வளவு கொடுத்திருக்காங்க? 800 and what? 500. 800 and 500 total என்ன இருக்கு? 1,300. 1,300. Then current assets. Current assets எவ்வளவு கொடுத்திருக்காங்க? 4,700 and 6,500. 6,500 total என்ன இருக்கும்? 11,200. This liabilities. What are the liabilities? Borrowings என்ன இருக்கு? 2,000 and what? 3,000 total 5,000 இருக்கு. Total 5,000 இருக்கு. Then what is the next one? Current liabilities என்ன இருக்குங்க? 2,000 and what? 1,000 total என்ன இருக்கு? 3,000. So it will give us net assets. $9,000, 11,000 total என்ன இருக்கும்? 20,000. If you look at the proportion, 9/11 control, sir, 9/20 control. 9/20. This will be like 11/20 proportion. Each parties maintain their proportionate control. So it will be called as which one? It will be called as which one? Business combination under common control. Business combination under which one? Common control. This is for DA, this is for TA, this is for D. Take up this, then we'll proceed. Since the control pre and what? Post merger remains what? The same. It will be treated as what? Business combination under which one? Common control, where pooling of interest method will be followed. Pooling of interest method will be followed. Number one, consideration is recorded at what value? Nominal value. Nominal value of shares allotted. Wait பண்ணுங்க. Nominal value of shares allotted will be, what is the share capital? Share capital எவ்வளவு இருக்கு பாருங்க. 6,000, 8,000 total எவ்வளவு இருக்கும்? 6,000 plus 8,000, totally how much? 14,000. This will be shared in which ratio? Shared by DA, 9/20 proportion. 9/20 proportion. 14,000 into 9/20. In 14,000 into 9/20, 6,300, and TA will be 14,000 into 11/20. 7,000. Same proportionally they will carry. Then all assets and liabilities are to be taken at book value. Are to be taken at book value. Please note this. Then we'll do entries in the books of purchase income. In the books of purchasing company, debit the assets taken over. What are the assets taken over? Plant property account debtor, current assets account debtor, financial assets, current assets, எல்லாமே என்ன value? Book value. What are the liabilities? Borrowings account. What is the borrowings? Total. Total 5,000. To current liabilities. What are the current liabilities total? 3,000. To consideration, recorded at nominal value. What is the nominal value? 14,000. To other equity. Other equity will be maintained. DA plus TA, it will be maintained automatically. DA plus TA, what other equity என்ன இருக்கு? 6,000 இருக்கு. Please remember, there is no balancing figure. This is for your reference, not for examination note. There is no balancing figure. If there was a balancing figure, என்ன எடுத்திருப்பீங்க? That would have been taken as which one? Goodwill or which one? Capital reserve. The question, it is only for your future understanding I have given. Okay, there is no balancing figure. If there was a balancing figure, you would have taken as what? Goodwill or capital reserve. Consideration account data 6,000, sorry, 14,000. It will be recorded at nominal value. This is in the books of purchasing company, or you can say acquirer. Balance sheet ரொம்ப simple. This will be the total of assets. Liability side, the equity share capital 14,000. Other equity 6,000. Current liabilities, okay, borrowings. Current liability how much? 3,000. This is the balance sheet of which company? Data Limited. This is the balance sheet of Data Limited after amalgamation. This is in the books of which company? Purchasing company. See, in the books of selling company, journal entry is easy. In the books of selling company, we will prepare which account? In the books of selling company, என்ன account prepare பண்ணு? Realization account. We'll do which account? The realization account. We'll do that. I request you to take it up. Over. Is it over? In the books of selling company, we will prepare which account? The realization account. First company. In the books of which company first? They ask you journal entry, you can write. Otherwise, you can just directly do ledger account. First entry is like realization account, data to assets, plant, property, equipment, financial assets, current assets. What is the plant, property, equipment of the first company? 7,500. Financial assets? 800. Then current assets? 4,000. We'll transfer borrowings. Borrowings, how much? First company? 2,000. By current liability? 2,000. Journal entry, borrowings, current liability to realization. What is the current liability? 2,000. Then purchase consideration due by Data Limited. What is the consideration proportion to the first company? Purchase consideration due. How much? 9,000. 9,000 is the net assets. Purchase consideration 6,300 for the first company. 6,300 for the first company. This is the purchase consideration. Then we prepare Data Limited account. To realization. How much we get? 6,300 in the form of shares in which company? Data Limited. We are getting 6,300. Then we'll prepare which account? Equity shareholders account. Equity shareholders account by equity share capital 6,000 equity share capital. By other equity, reserves and surplus. 3,000. Realization account tally pannunga. There may be a profit or loss. I hope loss work nenikiren. By equity shareholders account, loss transferred. What is the loss? $2,700 transfer pannunga. It will come as 2 realization loss. Balancing will be paid to shares in which company? Data Limited. The balance is paid 6,300. The shares received is allotted to whom? Our shareholders. This is standard in the books of selling company. And the standard 3 or 4 ledger accounts we will prepare. They ask you journal entry, simple to write. Realization account, data to assets account. Liability to realization. Data Limited account, data to realization for purchase consideration due. Shares in data to Data Limited account and the mari. Transfer the realization loss. Then finally transfer capital and other equity and settle which one? Equity shareholders. In the book, I hope they've given journal entry. So we do ledgers. Journal refer panni. Just refer the journal entry. In the books of which company? TA Limited. What is the PP? 8,000. 8,000. Financial assets are 500. Current assets are 6,500. Borrowings are 3,000. Current liabilities are 1,000. And the proportionate share of consideration 14,000 into 11 by 20. 7,700. Tally பண்ணா loss வரும். So we get 7,700 in the form of what? Shares. By equity share capital of the second company,
8,000.
8,000. Reserves,
3,000.
realization loss,
3,300.
3,300. Balancing for is paid in shares and data loan. That's it. So compared to the problem that we worked out, இதெல்லாம் simple தான். Provided you remember and revised. Shall we? We are not bothered. Selling company, we are not bothered whether the purchasing company is recording or not. Selling company is liquidated. Our equity shareholders will get other equity. Our pooling of interest method follow பண்றானா, acquisition method follow பண்றானா, we are not bothered. We just transfer to equity shareholders. Otherwise, selling company ki no Ind As is applicable. Why? It's not going to continue. It's going to be no going concern. No Ind As applicable. So, shall we? See, apart from the regular works, these ICMA materials questions will help you. Then I hope Institute will release model test papers, practice test papers. In that also you can go through. Okay, you will get a fair idea. I've shared one more material. Yeah, that is from ICI, Institute of Chartered Accountants of India Institute material. Okay, we'll discuss some of the questions, and I request you to try them at home. I've given you with detailed solutions only, so you can try them at home. Shall we? We'll discuss some of the problems today. Proceed பண்ணலாமா? எடுத்துட்டீங்களா அது? Shall we? This is just an overview of business combinations. The title is given as asset acquisition. Example அது மாதிரி கொடுக்க மாட்டாங்க. What is the difference between asset acquisition and business combination? For example, he is having 5 assets and 10 liabilities. I just take over 3 or 4 assets and I'm going to use it in my factory. Am I combining his business or only acquiring his assets? So when assets are acquired, they will be recorded at fair value. They will be recorded at what value? Fair value. Read the question. An entity acquires equipment and a patent. We are acquiring only equipment and a patent. 1,000 crore cash and land. Fair value of the land is 400 crores. Carrying value is how much? Fair value is the fair market value. Carrying value means the book value. Book value in the seller 100 crore கொடுத்திருக்காங்க. Fair value of the patent is how much? Fair value of the patent is how much? 500 crore. And carrying value is how much? 1,000 crores கொடுத்திருக்காங்க. The equipment and patent is related to the product that is just recent. Okay. Then the equipment and patent related to the product is just recently commercialized கொடுத்திருக்கா. The market of the product is still developing. Assuming the incurred entity has incurred no transaction cost, for ease of convenience, tax consequences on the gain to be ignored கொடுத்திருக்கா. How the transaction should be accounted for? Simple. It should not be taken as what? Business combination. It should be taken as which one? Asset acquisition. It should be recognized at fair value. It should be recognized at what? Fair value. What is the total consideration given? 1,400 crores. It will be allocated. It will be allocated between two assets. 500 by 1,500 into 1,400. 467 crores for which one? Equipment. For patent, 1,000 out of 1,500 into 1,400, 933 crores. There should be a gain on sale. There should be a gain recognized. Because there is a difference between which one? Fair value and which one? Carrying amount. You can go through the full details at home also. Next. Go to this. It is not an asset acquisition question. I request you to read the question. Then we'll discuss. Veera Limited and Zira Limited are both in the business of manufacturing and selling of lubricants. Shareholders of Veera Limited and Zira Limited agreed to join forces to benefit the lower delivery distribution cost. Business combination is carried out by setting up what? New entity called as what? Veera Limited. That issues 100 shares to Veera Limited and 550 shares to what? Zira Limited shareholders. The number of shares reflected relate to fair values கொடுத்திருக்காங்க. The company shareholders will get voting rights in Veera Limited based on the respective shareholding. Determine the acquirer by applying the principles கொடுத்திருக்காங்க. In the merged entity, who is the merged entity? Veera Limited. Total எவ்வளவு shares இருக்கும்? 100 plus 50, 150 shares. In this 150, how much is held by first company? Veera Limited, 100 out of what? 150. 100 out of? Next, Zira Limited will hold 50 out of 150, which means 66 2 by 3 control. 2/3 control is with which one? Veera. And 1/3 control is with what? Zira. Who is acquirer? Veera is the acquirer. The person who is acquiring control, that is what? They would have given some cases it may cause reverse acquisition. Reverse acquisition lang kadayadu. It's a normal acquisition only. Veera Limited gets 67% shares. Zira Limited gets what? 33 1/3% share. Hence Veera Limited becomes what? Acquirer. Veera Limited becomes which one? Acquirer. Next. Look at this question. Balance sheet of which company is given? Entity A and B is given. Business, before the business combination is put through கொடுத்திருக்காங்க. Okay. Current assets, non-current assets are given. Current liability, non-current liability. Equity shares, 300 shares, 6,000 shares is given. Total equity, other equity கொடுத்திருக்காங்க. இதே மாடல் நம்ம ஒரு கொஸ்டின் பண்ணிருக்கோம். Entity A will issue how many shares? 2.5 shares in each for what? Entity B. All B shareholders will exchange their shares. இதே மாதிரி பண்ணிருக்கோம் கொஸ்டின். the question. இதே மாதிரி தான் இருக்கும். வேல்யூ கொடுத்துருப்பாங்க 50 by 20 போட்டு 2.5 போட்டிருக்கும். You'd have given 2.5. Here directly given how many shares? 2.5 shares are exchanged கொடுத்துருக்கான். Okay, wait பண்ணுங்க. How many shares are there in the selling company? How many shares are there in the selling company? 60,000 shares are there in which one? Selling company. 60,000 shares are there in which company? Selling company. Each shareholder will get what? 2.5 share. 60,000 into 2.5. 1,50,000 shares will be given. 1,50,000 shares will be given. Start. Let us do it. No issues. We'll do it. This is problem for practice. Which question? The reverse acquisition question. A Limited's shareholders will continue to hold euro shares. A Limited shareholders will continue to hold how many shares? 30,000 shares. Take it up along with me, no need to wait. 30,000 shares. B Limited's shareholders will get how much? 60,000 into 2.5. How much? 1,50,000 shares. 1,50,000 shares. Total number of shares in merged entity 1,80,000. So control perspective 30,000 out of 1,80,000. Eவ்வளோ percent control? How much percentage control is with first company? How much percentage is with first company? 1 by 6, huh? To be 16.67%. Give 50,000 out of 1,80,000. 5 by 6, you can say 83.33% control. So, acquirer, it is an example of where V Limited takes over which one? The control of which one? Merged entity. Take it.
$150,000. 50,000.
60,000 into? Okay. Done. Shall we? What do you mean by acquisition date? What do you mean by acquisition date? Date on which what? Effective control is acquired. Date on which effective control is what? Acquired. Go through this. Maybe this can be tested in acquisition date. Either date of shareholder agreement, appointed date of shareholders agreement, date of obtaining control over the board's representation கொடுத்திருக்கா, date of consideration paid, date of transfer of shares கொடுத்திருக்காங்க. Which date is relevant here? So acquisition date is which date? 1st July 2021. Next question. We acquired the business with effect from 1st April. As per the binding agreement, we'll have an effective control from which one? 1st April. Consideration will be paid later on. Consideration will be paid what? Later on. Date of payment of consideration doesn't matter. Date of effective control that matters. So here acquisition date will be which one? 1st April. Acquisition date will be 1st April. Suppose if you acquire step by step, 20%, 30%, 40%. Okay. When you have more than 50% control, then you become which one? Acquirer or that acquisition date. 31st December, we hold 35%. A Limited holds 35% non-controlling interest in entity B. They purchase additional 40% interest, which gives control over the B. This transaction is referred as which one? Business combination achieved in stages. Some also is called as which one? Step acquisition. Simple. Where you acquire 75% control, of course, more than 50% control, now you will be called as which one? Acquirer. Look at this question. Read the full question, please. On 1st April 2021, we acquired how much? 30% of voting right for 5,000 crores. For how much? 8,000 crores. Sorry, 8,000 crores. Investment of XY is limited using equity method of accounting as per Ind As 28 கொடுத்திருக்காங்க. They recognize net changes in கொடுத்திருக்காங்க. Share of profit or loss, share of exchange rate difference, share of revaluation reserves கொடுத்திருக்காங்க. Therefore, the carrying amount of the investment is, what is the investment made? 8,000 crores plus all the share. 700 plus 100 plus 50. நம்மளோட share add பண்ணி, today they have shown in the balance sheet how much? 8,850 crores காட்டியிருக்காங்க. On 1st April 2021, we acquired remaining 70% for cash 25,000 crores கொடுத்திருக்காங்க. Already we are holding 30%. Now we acquired 70%. Fair value of the 30% interest already owned எவ்வளவு கொடுத்திருக்கோம்? 9,000. Fair value of net assets எவ்வளவு கொடுத்திருக்கோம்? 30,000. Determining the accounting for such business combinations சொல்லியிருக்கோம். Previously held ownership will be, we have to revise the value to fair value. அந்த 30% interest ஓட fair value எவ்வளவு கொடுத்திருக்காங்க? 9,000 கொடுத்திருக்காங்க. இப்போ 70% எவ்வளவு acquire பண்ணிருக்கோம்? 70% எவ்வளவு acquire பண்ணிருக்கோம்? 25,000 acquire பண்ணிருக்கோம். Okay, start. Step acquisition. As per Ind As 103, in case of which one? Step acquisitions, the previous holdings should be taken at what value? Fair value. Previous holdings should be taken at fair value. So, fair value of previously held interest and the 30% odd interest value below 9,000. Cost of investment made today. The 70% of the value we invested today. How much?
25,000.
25,000 we invested. 100% acquired, Ilya. So less fair value of net assets. What is the fair value of net assets? 30,000 crores கொடுத்திருக்காங்க. It will give us goodwill.
4,000.
Okay. And the 30% investment எவ்வளவு acquire பண்ணிருக்கீங்க? Acquired for 8,000. Okay. Add and the sum 700 plus 100 plus 50. They would have recognized in OCI. எவ்வளவு recognize பண்ணிருப்பாங்க? 850. Okay. Then what is current fair value? 9,000. Okay. Then fair value change in profit and loss account, the balancing for renewal 150 more, it will be recognized in P&L account. I hope in the last session we have done the same question of this model. Previously they would have done investment account data 850 to which one? OCI எவ்வளவு பண்ணிருப்பாங்க? 850 they would have done. Today that OCI account data எவ்வளவு இருக்கும்? 850. Investment account data 150 to which account? Profit and loss account. The gain will be recognized. How much will be recognized? How much will be recognized? Total 1,000 will be recognized. So carrying amount of investment today is 9,000. 2 times we debit the investment. Before 850, here or 150. Total added 1,000. That's why the cost of investment becomes what? 9,000. Fair value of the previously held investment is what? 9,000. So wait, பண்ணுங்க. When you pass a journal entry, listen. Net assets account data எவ்வளவு acquire பண்ணிருக்கோம்? 25,000. Goodwill account data எவ்வளவுங்க? 4,000. To
30.
investment account asset எவ்வளவுங்க?
30.
To investment account previously held investment fair value எவ்வளவு இருக்கு? 9,000. Otherwise this 30,000 we purchased plus 850 plus or 150 1,000 அந்த மாதிரி. To consideration, what is the consideration payable now? 25,000. Consideration account data similar type you would have done. 25,000. It is paid in cash. It's given. We acquired for cash 70%. How much? 25,000. That's it. What is the meaning of consideration? Anything paid to creditors, lenders, employees, owners. What can be taken as consideration? Meaning of consideration, Patholya. Okay, I'll come to that. Take up this, then I'll come. Don't go to the next one. Wait. Or is it over? Or in love? Shall we? Listen, before I go to the next question, let me to go back to the meaning of consideration. Fair value of shares allotted to acquire control, debentures given to gain the control, assets given up to acquire control, present value of deferred consideration also to acquire control only, contingent consideration to acquire which one? Control. Simple. Whatever is paid to the owners of the selling company, we call it as which one? Consideration. Now read the next question. Don't look at your note. I request you to look at the display. The solution, our eyes will go to solution now. The solution will be just 3 lines. Just look at the display, answer it properly. KKV Limited acquires 100% of control over which one? Viva Limited, okay? A company owned by a single shareholder who is also which one? KP of the company, okay? For a cash payment of 20 million and contingent payment of which one? 2 million. So the terms of agreement provides that 2 years after the acquisition, if the following conditions are met. If EBITDA continues after 2 years, so much at what rate? 21%. The former shareholder continues with which one? Employment at least for how many years? 2 years. No part of contingent payment will be made if the former shareholder does not complete what? 2 years employment period. Calculate purchase consideration. Wait. You are the single shareholder. Okay, let us say I am the single shareholder in the company. You are acquiring 100% of my company. You are acquiring 100% of my company. And you are telling we will be paying 20 million now. We will be paying 20 million now for the acquisition. Plus the US dollar 2 million will be paid. It will be paid depending upon satisfaction of two condition. In a condition, okay, the earnings should be at least 21% இருக்கணும் 2 years. Second என்ன சொல்றீங்க? This shareholder should continue as which one? Employee of the merged entity for at least how many years? 2 years. அதை complete பண்ணலைன்னா then you will not pay this 22 million சொல்றீங்க. Now wait பண்ணுங்க. The 20 million receipt will be taken as consideration. The 20 million receipt will be taken as consideration. Why? I receive it as an owner. I receive it as an owner. What about the extra contingent consideration? இதுல ரெண்டு கண்டிஷன் இருக்கு. First condition, general condition, okay. Second condition பாருங்க. I should continue as a shareholder or employee. Employee. So the 2 million, I'm getting it because I'm an employee. So how can that be taken as a purchase consideration? So anything paid to the owners only can be taken as consideration. The 2 million is received in employee's capacity. That cannot be taken as which one? Consideration. That is one. So only what will be taken? 20 million will be taken as purchase consideration. And the 2 million will be taken as what? Employee's cost. I am receiving in the capacity of which one? Employee. Suppose first bullet point list open in the. Then I receive it as which one? I need not continue as an employee. As an owner only, I'm going to get it at the Mariarko. Then you would have taken as a consideration. Because of the second bullet point, okay, I should continue as which one? Employee and all that. That 20 million will be taken as employee's cost in the books of the other company. Look at the next one. Read the full question, then we'll solve it. Read the full question, understand, then we'll solve it. You acquired all the outstanding shares. 3 shareholders with equal shareholding. 2 of them senior level employees are irukanga. Employee shareholders will receive 60 lakhs plus additional payment based on multiple earnings over the next how much? 2 years கொடுத்திருக்காங்க. Non-employee shareholders will receive 1 crore on the month. The additional payment of each of the employees will be forfeited if they leave the employment at any time 2 years following its acquisition by what? ABC Limited. Salary received by them is considered reasonable remuneration for their services. How this will be attributable to the post combination service? ரொம்ப simple. Wait பண்ணுங்க. If I don't continue as an employee, how much I will get? The 60 lakhs and which one? 1 crore. That can be taken as consideration because I am receiving that in the capacity of the shareholder or the owner. What about that additional 1 crore 50 lakhs to 2 crores that I will receive if I get it as which one? Employee. So as per Ind As 103, this 60 lakhs and this 1 crore can be included. The 60 lakhs and what? 1 crore can be included and not that extra amount. That is what they would have given. Additional consideration is for which one? Post-employment service. Therefore, only 60 lakhs is attributable to what? Consideration. The other one, 1 crore can be taken as what? 1 crore can be taken as what? Consideration. All the answer. In the capacity of employees, there is not consideration. Type okay. In the capacity of shareholder, if we get, that will be taken as which one? Consideration. இந்த மாதிரி கொஸ்டின் நிறைய பண்ணிருக்கோம். 60% of ordinary shares are purchased for what? 975 crores. Identifiable net asset 97.5 crore. 97.5 crore கிடையாது. 97.5 crore. Net assets are 150 crores. Fair value the 40% ordinary shares is how much? 60 crores. Carrying amount of net assets 120 crore இருக்கா. Measure non-controlling interest at what value? fair value are based on net assets. Full goodwill method, partial goodwill method. The pathway தெரியும். Okay. Non-controlling interest இங்க 65 crores taken at what value? Fair value கொடுத்திருக்காங்க. 65 crores fair value கொடுத்துறா directly we take it. If it is based on net assets, என்ன பண்ணுவீங்க? 150 into 40%. 150 into 40% என்ன வரும்? 60 வரும். This goodwill is a balancing figure. It's a partial goodwill. It's a full goodwill. It's a balancing figure. This you can go through at home. Okay. This model problem already we have done. நம்மளோட மெட்டீரியல்ல பண்ணிருக்கோம் இல்லையா? அந்த two division transferred, two divisions x and y division transfer பண்ற மாதிரி. Okay. The shares can be given to what? Employees. Clear கொடுத்திருக்கோம் பாருங்க. Division mobiles along with assets and liabilities are sold for what? 25 crore. The company will allot 1 crore shares of 10 each at a premium of what? 5 per share to the members of the selling company. Shares will be given to whom? Shareholders of selling company in proportion to their shareholding. One of the shareholding was holding 52% கொடுத்திருக்கா. Assuming that no other transactions are given, pass entries கேட்டிருக்காங்க. This is same like which question? You பண்ணுங்க இந்த மாதிரி question. This is what? Okay. You will pass this entry and please remember shares are allotted to the company or shares are allotted to the shareholders. Shares are allotted to whom? Shareholders. இதே மாதிரி தான் டீல் பண்ணணும், சால்வ் பண்ணணும். Shall we start? In the books of what is the new company? Turnaround Limited. Turnaround Limited. It's a new company. Try பண்ணுங்கப்பா. So will you follow normal acquisition method or pooling of interest method? Okay, demerged entity. What is the new entity? What is the name of the new entity? Turnaround Limited. Okay. Take the assets. What are the assets? Plant, property, equipment account. Data, you can take net book value. 500 minus 400, 100. Current assets account. Data, current assets account. Data, current assets account. Data, 500. Okay. Leave a line gap. To current liability. அங்கே மைனஸ் பண்ணி போட்டிருக்காங்க. current liability மைனஸ் பண்ணி போட்டிருக்காங்க 400. So current liability 400. Then to loan funds, current liability எவ்வளவு 400. To loan funds எவ்வளவு இருக்கு பாருங்க. Loan funds 300 இருக்கு. Loan funds are 300. Then அந்த other equity like surplus negative இருக்கு. It is having a negative balance 100 இருக்கு. Then to consideration 1 crore shares of 10 each. It will be recorded at face value only. Pooling of interest method will record at what value? Face value. The balancing figure, if any, will go to capital reserve or goodwill. இதில் வேணாலும் இங்கே போகும். Total of debits. Really?
700.
The difference will be taken as what? Capital reserve or goodwill? Balance sheet வேணும். Balance sheet can do. Based on this entry, can prepare balance sheet. In the books of other company, in the books of which company? Who's the selling company? Tell. Enterprise Limited. After the demerger, PPE will be what? 250 minus 225. எவ்வளவு continue ஆகும்? 25 continue. PPE will continue. Then which one will continue? Current assets will continue. Current assets how much will continue? 200 will continue. Current assets அப்புறம் loan funds இருக்கா? No loan funds. Current, okay. Equity எவ்வளவு இருக்கு? equity 25, reserves and surplus, other equity 175 continue ஆகும். No loan funds, current liability பாருங்க, asset side minus பண்ணி கொடுத்திருப்பான். What is the current liability given? What is the current liability given for the first one? 25. That's it. What about the shares allotted? Shares are allotted to us or to the shareholders? Shares are allotted to the shareholders of Enterprise Limited. Therefore, it is not appearing in the balance sheet. So the selling company is giving the shares to the selling company is giving shares to whom? Our shareholders. We are not getting the shares. So that will not appear in our balance sheet. That will not appear in our balance sheet. Last class le padam, adhe model. When shares are allotted to us, and the 10 crore will come as what? Asset side investment work. Suppose if shares are allotted to us, இது எப்படி வந்துடுங்க? Investment of our assets. Investment in which company? Turner own. The 10 carded over. This will be shown in which one? Other equity. Reserves and surplus automatically included. This will become 35. So this will is 25. And reserves and surplus will become 175 plus 10. So the total of 235. The shares received increases our net worth. So that will be recorded in what? Other equity. That will be recorded in which one? Other equity. This is not applicable because the shares are allotted to the shareholders of which company? Enterprise Limited. So it will not appear in the balance sheet. It will not appear in the balance sheet. In the same model, I have given next 3 questions or 4 questions. With solution I have given. I request you to go through. Because எல்லாத்தையும் solve பண்ணிட்டா then you will not have something to practice in a market. Next 4 or 5 questions will be little advanced in nature. Okay, normally that is tested in the CA exams. Okay, CMA exams and the mari questions are very கேட்டதில்லை. They have not tested. So next 3 or 4 questions I request you to try.